and welcome back to the Investing with Rue YouTube channel. We are in a new studio today and going forward. But today's video, we are going to be talking about how to invest your very first $1,000. For those of you who might not know me, I actually started my investing journey with only $300 to my name. So it's very, very possible to start with at least $1,000, if not less. And I hope by the end of this video that you will have the tools necessary in order to actually start investing successfully with that $1,000.
Great success!
These are the exact steps that I would take if I had to start all over with nothing but $1,000. And the only thing that I could carry over with me is the knowledge that I've accumulated over the last 10 years of investing.
The billionaire Warren Buffett says, the more you knowledge, the more you Lamborghini.
And before we get started, if you don't happen to have $1,000, I will go ahead and link a video up here for you that outlines exactly how you can get your first $1,000 for absolutely free, so long as you have a bank account and a driver's license. What are the first things I need to know? So honestly, if we were just starting out, what most people are just going to tell us is to buy an index fund or a mutual fund, because they will likely give us slow but consistent returns over the long term. And the beautiful thing about those is that you don't really have to manage your investments when it comes to sitting in something like an index fund, which might sound really, really nice, but at the end of the day, most of those investments are going to grow very, very slowly. Way too slowly if you're looking to build wealth with only $1,000. So what about the investments that might only require $1,000 but have much higher levels of return? And before we dive into that strategy, you must remember that this strategy does have increased levels of risk, which is why you are also getting increased levels of returns. Of course, this isn't the most high risk strategy. There are much greater risk, things like gambling at a casino, or possibly even putting all your life savings into a lottery and just hoping and praying that you're going to win the lotto. But obviously those aren't even investments, and the ones that are, I'm not even going to be talking about, because what's the point of gambling when what we want to do is actually invest? So let's talk about the strategy. First, what is the strategy and what should we be buying? Well, first, we're going to talk about two different investment vehicles, one being cryptocurrencies and the other being individual stocks. With both of these, because we're approaching the more higher risk investments, you need to have a strategy to finding the gems amongst the garbage. Try to think back to middle school or high school when you had to do like a research paper, or maybe present a PowerPoint in front of the whole class. Well, to be honest with you, finding a good investment is no different than doing that. And what I would do is I would personally prioritize the investments that I'm very familiar with, like companies that I use maybe on a daily or weekly basis. And this might sound like a basic principle, but I promise you this is so effective. And now that you have some of the tips and tricks in your tool belt, let's talk about the exact blueprint that you can use to find the next gems and the next big winners in either the crypto market or the stock market. And the first step is very simple. All you need to do is pick an emerging market. Now, what do I mean by that? Well, for example, it could be anything from tech to medicine to art to food, any sector that exists out there, transportation, finance, anything. Really, you want to focus on anything with increased amount of innovation. And although it might be hard to figure out what has investors' interest, you can also just check the local news and see what's kind of trendy right now and try to avoid that, because usually all the companies within that trendy sector have already had their bubble. So kind of avoid what's at the front of the headline. And what I'm talking about is just the sector itself, not particular stocks, because sometimes you can buy a particular stock or cryptocurrency as it's still being talked about in the news and do pretty okay. But we want better than okay. We want fantastic results. So on to step number 2. And this one is also fairly simple, and that is just to find and write down, it could be on a whiteboard or your phone or maybe even a notebook, 5 to 10 companies that are within that niche. They can be the giant corporations that are within that niche, or they could be the tiny small market cap companies or cryptocurrencies in that niche. That really helps when you end up actually picking these investments and putting your money in, but we'll get to that in just a second. Now that you have a small list of companies, the third step is to actually do the due diligence and the research. What I would do is do a little bit of headline reading. So what you can do is you can type in the stock or ticker symbol name, and right after that you can type in news. And that will populate with a bunch of news articles that are trending for this particular company. And the questions that you want to really get an answer for is, what is this company doing as of recently? What makes them special or different from their competition? What products do they have, and how do they differ from the other companies that are within that same niche? And another question that I really like to ask is, how do they stand out to their consumers? Are they the most well-known company, and why? Or do they have a troubled past with their consumers and maybe making the wrong business decisions that ended up hurting their consumer base? All these questions are really important to answer, and really helps if you write them down and look at each company in this way. A good resource, if you really wanted to dig super deep, is places like Reddit or Twitter, because sometimes those places can outline some of the risk factors that might help you maybe even avoid a potentially bad investment. So make sure to not skip this step. I think this is one of the most important steps in your investment research journey. Now, the fourth step should be fairly easy as well once you've done it once or twice, and that is to create a spreadsheet on Excel, or if you don't have Excel, you can do it on Google Sheets, where you plot certain metrics of the company. The metrics that you want to look at are things like market cap. You can look at their revenues, you can look at their debt, you can also plot their PE ratios and where that is headed. I like to also put the growth rate of the sector and the growth rate of the company as well. Those are two metrics that I really like to look at. And another one that you might find really fascinating is to look at the number of customers that they actually have year over year, and to make sure that that number is increasing. And finally, the fifth step, the time has come to make a decision. I like to personally look at the metrics that we plotted on the Excel sheet and then rank them by the highest growers, maybe the lowest amount of debt. And if one or two of these companies check all of my, physical or mental boxes, I mark them as an S tier and then go on to the next one. If an investment maybe just has one or two things that kind of are bringing the stock down, I mark it as an A tier. Then if the company has maybe 3 or 4 bad things pulling it down, well, maybe then it's a B or C tier, and so on and so forth. Eventually, you just kind of take out anything C or below and maybe stick with the B, A, and S's. And obviously, the more S's and A's, maybe sometimes B's that you invest into, the more chances there are for your overall success. But remember that you also can always come back to this spreadsheet and maybe plug in new numbers and reevaluate how the companies are doing, because maybe one of them had a really bad year, or maybe just a really bad start when they first came onto the market, and maybe a few quarters later or a year later, they're doing a lot better, and you plot those, and maybe a B tier turns into an S tier, and that way you don't have to recreate the whole spreadsheet all over again. So that way you can find the gems that really came out of the ashes. Now, the sixth and final step is actually to just dollar cost average in. That's my personal strategy for investing. But when it comes to investing $1,000, let's say I found 3 or 4 S and A tier companies and I decided to put money in them. Well, $1,000 isn't really great to dollar cost average in. The only time I would do that is if I have a consistent $1,000 or more dollars coming in every single week, or bi-weekly or monthly. But if you only have that $1,000, it's almost better that you just put it into something. And sometimes it is beneficial to diversify into multiple investments. And as long as they're all S tier, then it wouldn't be too hard to throw maybe $250 in 4 different companies, for example. But let's say you only have 1 S tier and maybe 2 A tiers. Well, maybe you just throw the $1,000 into just the one. Again, remember that not all the time do the S tiers outperform the A and B tiers. So like I said, it's always best to dollar cost average in, and the best investment strategies come from slowly buying stocks and cryptos over the long period of time. It's not always just get $1,000, throw it in, and don't touch it ever again. If you plan to do that and you're willing to sit on it for 20, 30 years, then you can just buy an index fund like we talked about earlier. But if you're curious on what the best investment strategy looks like, whether that's dollar cost averaging or just throwing all of your money into a particular investment all at once, and you really want to know what history has taught us about trying either one, well, I have the video just for you. And without any further ado, I hope you enjoyed this video. If you did, make sure to smash the like button if you haven't already, and I'll catch you guys in the next episode. Peace out.